Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. On Discord, my name is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel that is a great place to post questions, comments, and content related to the topics of my presentation as well as the topics of the channel that I'll go over in just a moment. And I'm also on X, formerly known as Twitter, and my name there is @DougPless. And I would encourage everyone to consider joining Bookmap Discord if you have not already. It's free and open to everyone, whether you subscribe to Bookmap or not. There's a lot of great content here. Also, the stream in Discord is at 1080p versus 720p max for YouTube. So higher resolution stream in Bookmap Discord. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. And note that I focus on options because I think they're forward-looking. They're about expectations, where traders expect price to trade in the future. I have a two-step process for trading, and the first is positional analysis. So I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. So if the levels are shifting, the key gamma levels, open gamma-weighted open interest, if these levels are shifting higher, for example, that indicates to me that traders are looking for higher prices and they're positioning themselves in the options market for higher prices. So that's part of positional analysis. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis, and for setups, for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset that can be taken any number of ways. For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES futures. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat in YouTube for your questions and comments. So please feel free to post, and I'll do my best to answer your questions. And hello, Tony. Welcome. Glad you're here. Great to see you. Here's my agenda for today. What I want to cover today: first of all, news items, economic data, events, and earnings. Then I'll go through my positional analysis. Then I'll review some setups from this morning. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, so let's get started with news items. So first of all, today, PPI data came out. And here's PPI data, mostly higher than forecast and also higher than previous. Year over year, month over month, core PPI, month over month, year over year, again, mostly greater than expected and greater than forecast. All right, tomorrow CPI comes out, should be a higher impact report, and could potentially cause quite a bit of market movement. And that depends on how market makers are positioned. Part of that depends on how market makers are positioned on the gamma curve tomorrow, whether that gamma notional remains negative or becomes more negative than today. So we'll take a look at that in just a couple of minutes. All right, so that's tomorrow, CPI, and then Friday, consumer sentiment at 10 a.m. And most important for today, after PPI, the FOMC minutes come out at 2 p.m. So I'll stop wherever I am and we'll take a look at the market as the FOMC minutes come out. I'm not sure what that will add. There were a lot of Fed speakers out yesterday with pretty dovish comments. So we'll stop wherever I'll stop wherever I am, and we'll take a look at the live market to see if there's any impact. All right, so that's data for today as well as the rest of the week. All right, now let's get started with my positional analysis. I'm going to start with the S&P 500. This is the ES futures in Bookmap. And before I take a closer look at this chart, I'm going to take a look at a larger time frame. I'm going to go to the SPX. This is a 30-day, 1-hour chart showing price and key levels. So let's focus on price first. This is the Friday, September 15th options expiration, call dominated expiration, and that's when the downtrend began. And then this recent rally began really on Friday, last Friday, with the jobs report. So price was trending a little bit higher and then rocketed higher on last Friday as the jobs report was released. And that rally appears to have hit a roadblock here at around the upper weekly expected move for this week. All right, so that's the price action. Key options expiration and events marking the turning points in the market. All right, let's take a look at some of these levels now. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That changes every week. That's a 1 standard deviation move. So the options market expects the price to trade within this range, SPX to trade within this range 68% of the time. And that's just based on the options market. That information should be available in any trading platform that has an options chain. All right, next, the dashed blue lines are showing the upper and lower daily expected move. And note that SPX is trading within that range today. So trading down below the upper daily and weekly expected move and above the lower daily and weekly expected moves. All right, the dashed red lines are Spotgamma levels. These are proprietary Spotgamma levels available to Spotgamma subscribers. I'm going to point out the key daily levels. So first of all, 4,200 is the put wall. That's the strike with the largest net negative gamma that can be expected to act as support. The next level up is the volatility trigger at 4340. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And note that is not exact, so market makers' position on the gamma curve at the beginning of the day, according to the gamma notional, was still slightly negative. But so far, really, I would interpret gamma notional for SPX as really somewhat neutral today. The spot gamma index was just above 0, and that is actually what Brent at spot gamma looks at. All right, so the next level up is 4,400, and that is the call wall, the strike with the largest net positive gamma, and that's also the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma, so that's a very important level where most of the gamma weighted open interest is concentrated, at least for today. And note that absolute gamma strike did move higher from yesterday, from 4,300 yesterday to 4,400 today. Also, the volatility trigger moved slightly higher from 43.25 to 43.40. So the shift higher in the absolute gamma strike was slightly bullish. I interpreted that as bullish. All right, so those are the key levels. Let's take a look at a one-day chart for SPX so we can just focus on the levels that are in play for today. So I'm showing actually 2 days worth of data here. So this is yesterday. SPX did trade above the upper weekly expected move, then moved sharply lower. I think there was news that came in around 1 p.m. Eastern Time. And then today that upper weekly expected move acted as resistance right at the open. And now SPX is trending lower. All right, let's take a look now at Bookmap. So in Bookmap, I have my own cloud notes, and I'm showing SPX levels. So here's this 43.76 resistance level that was not shown on the SPX chart. This is something that is noted in the Spotgamma AM Founders Note, and I add that to my cloud notes. Just above that is the upper weekly expected move, shown with the dashed purple lines again. That's for ES. Then I also have SPY levels on this chart. Here's the SPY 435 volatility trigger. And note now price is trading below that level. And also down below the 4350 level, that is SPX 4350. So note there is a difference in price between ES and SPX, and it changes a little bit every day. It tends toward 0 toward the end of the toward the contract rollover. Today it's 32. So SPX 4350 is at ES 4382. All right, so the levels in play, the main levels. So support, I would say, yet to be determined, but the resistance clearly at the upper weekly expected move for ES, just like SPX, in this 43.76 level just below that. So clear resistance in the morning. We'll take a look at setups in a few minutes, and we'll see what options traders were doing, as well as other players shown here in Bookmap. So we'll get to that when we take a look at setups. So those are the levels in play for today. Again, key levels, upper weekly expected move acting as resistance. Shifts in levels. I talked about shifts in levels higher for SPX for the volatility trigger and absolute gamma strike. And for SPY, the volatility trigger also shifted higher from 430 yesterday to 435 today. And that's this level right here, 435. All right, let's take a look at NASDAQ now. So here are the NQ futures in Bookmap. And I'm going to take a look, first of all, at a QQQ chart. So I can isolate the QQQ levels. So here's QQQ. I'm showing a little bit of the price action before the market, showing all the concentration around of price action and volume we'll see in just a minute around the 370 level. 370 is the absolute gamma strike for QQQ. And note the volatility trigger for QQQ is at 369, and now price is trading below that level. And 370 again is the absolute gamma strike. I'm going to squeeze this in just a little bit to see this combo level. We'll see this on the NDX chart right here in just a moment. So this combo level combines QQQ and NDX, gamma weighted open interest, and shows it in terms of QQQ price here. We'll see on the NDX chart that level is shown in terms of NDX price. Again, that's combining QQQ and NDX, gamma weighted open interest. All right, let's take a look at NDX. Always like to take a look at this just for completeness. So here's that combo level. And just above that is the call wall. Oops. Not sure what I did there. All right, let's try this again. So here's this combo level that I just mentioned on the QQQ chart, and just above that, actually the combo level is above the call wall at 15,250. That's a very important level for NDX. That is the call wall and the absolute gamma strike that can be expected to act as resistance, as it did. All right, let's go to Bookmap now. So here's a Bookmap. And again, I have my own cloud notes here. There are the NDX levels. There's the 15,250 absolute gamma strike and call wall acting as resistance. And support for today yet to be determined. So that, again, just like the SPX, that resistance level, very clear level that you would expect to act as resistance, did for both the S&P 500 and NASDAQ. For the S&P 500, upper weekly expected move, and for NASDAQ, it was the NDX call wall acting as resistance this morning. And again, support so far yet to be determined. All right, so those are the levels in play for S&P 500 and NASDAQ. There were some shifts in levels. For NDX, the volatility trigger shifted slightly lower, and for QQQ, the volatility trigger shifted higher from 365 to 369, and the call wall shifted slightly higher from 372 to 373. All right, let me check for questions. All right, Maravan, I hope I'm pronouncing that correctly, says hello. Hello, Maravan. Can you explain levels for gold market? I wish I could, but there are no levels for gold. Spotgamma does not provide levels for the gold market. Just the equity indexes and stocks. All right, Anis Ahmed, hope I'm Sorry if I'm mispronouncing that. Hello from Dubai. Hello from North Carolina for me. First time here, do you have any starter video series to understand this type of charting to get started? For Bookmap, there's a great, a very substantial, great learning center. Just go to the Bookmap website and look for the Learning Center. There's a series of starter videos. So just go to the Bookmap website. Great information there. That should help you get started. And Redis, sorry. Sorry if I'm mispronouncing. Asked me if I can take a look at Bitcoin, and sorry, no, I do not track, look at, or trade Bitcoin. You can see what I'm trading and what I'm going to talk about right up here on my Bookmap chart. ES futures, NASDAQ futures, and mainly the stocks that I'm going to look at are the main large cap tech stocks, the Magnificent Seven. So this is what I trade, what I look at, and what many other traders look at. Again, ES and NASDAQ futures. All right, so sorry about that. Sorry I can't provide any more information for gold or Bitcoin. Although when I get to the live market, I can see if GLD is included in the list of stocks that support Hero. All right, so if I forget, maybe you could remind me, and we'll take a look and see if GLD is in there. All right, let's take a look and see how market makers were positioned on the gamma curve at the beginning of the day. I like to look at this every day. This will give me a sense of how market makers will react, but potentially react to changes in price and applied volatility, and also a sense of the volatility for the day. In a very negative gamma environment, I expect market makers to be trading with price, and that tends to enhance volatility. And in a less negative or even positive gamma notional environment, smaller trading ranges and less volatility for the day. So this is how market makers are positioned on the gamma curve at the beginning of the day. And I'm going to look at gamma notional for SPX, SPY, and QQQ. I generally don't look at gamma notional for NDX. It's not significant compared to the others. Note, all these numbers are negative. Still, market makers gamma notional still negative at the beginning of the day, but less negative than yesterday. All right, so again, still negative, but less negative than yesterday. What this indicates that traders are long puts, market makers are short puts, and as price decreases, they have to sell futures to hedge their delta exposure, and as price increases, they can buy back their short futures. That is in a negative gamma environment. Let's take a look at the Vanna model, which will give us a graphical illustration of that. I'm going to start with SPX. What this chart is showing is delta notional, market makers delta notional on the vertical axis, and how that changes with price on the horizontal axis. There are two curves on this chart. The light gray curve shows how market makers delta notional changes with changes in price only, and the purple curve adds implied volatility to the equation. That's showing how market makers delta notional changes with changes in price and implied volatility, and that change in delta notional with a change in applied volatility is the Vanna effect. Vanna is a second order Greek. All right, let's take a look at some prices. And the SPX has been falling all day. Let's just take a look at, let's go back to the SPX chart. So the high day was at the upper weekly expected move, right around 43.76. So let's locate that on this chart. So here's 43.76, somewhere between these two lines. So this is near the bottom of the curve, indicating there was not much put Vanna fuel left in the tank. And I've talked about this every day, how this put Vanna fuel has been diminishing, pretty much burned up since the start of the rally last Friday. So what this indicates that as price increases, there's very little put Vanna fuel to fuel a move higher. Market makers really don't have that many short futures to buy back. On the other hand, if price decreases from here and implied volatility increases, market makers will need to sell futures to hedge their delta exposure. So this works both ways. So this is what is going on today. All right, let's take a look at current price. SPX right around 43.50. So that's right around here. So this arrow is a little bit exaggerated, but market makers again in this portion of the gamma curve have to sell futures to hedge their delta exposure as price decreases and implied volatility increases. All right, so that's the Vanna model for SPX. All right, let me check for questions. And Tony asked, do you look at any smaller large cap stocks, 10 billion market cap? Do you look at short floats or just options? So first of all, I showed you again the stocks that I take a look at. Apple, AMD, Amazon, Google, Meta, Microsoft, Nvidia, Tesla, as well as the S&P 500 futures. Although if you have any specific stocks you want me to take a look at, when I get to the live market, I'll take a look at those. All right, so the second part of your question, I just look at options. So the stocks that I consider or trade most often, short float is not a consideration. So a lot of people do look at that. That's just because I don't look at that doesn't mean it's not valid. But that's just something that I don't look at. My timer is pretty limited, and I have understand how the stocks that I look at trade. So that is, again, that's what I do. All right, Russia Cash asks how to understand in which market condition which Greek should be traded and why, and also why Spotgamma is important to trade. Well, I would say just watch my videos. So I'll show you why Spotgamma is important to trade. And as far as Greeks go, I look at delta, theta, primarily as the primary Greeks. Secondary, I look at Vanna and Charm. Ancient the Architect asked, do you set limit orders when trading futures, or you jump in at the opportunity? I use bracket orders when I trade futures. So I have a stop limit as well as a take profit order. So I use brackets with stop limits and take profit orders always when trading futures. And more and more, I'm just trading options rather than futures, which I really don't need a stop limit, stop order with options. I use either buying options or buying spreads. So those are all defined risk. Or I sometimes sell spreads or iron condors, also defined risk. All right, let's take a look at the Vanna model for SPY real quick, and then QQQ, and then we'll take a look at some setups to get to the market. All right, so right now SPY is trading at 434. So still pretty close to the lower end of this Vanna model here, but indicating as price continues to drop, for example, market makers will need to sell futures to hedge their delta exposure. So we saw that at the beginning of the day, market makers' position on the gamma curve was negative, still negative, and that's why we're looking at this portion of the Vanna model, this portion of the curve that is skewed upward to the left. Let's take a look at QQQ. QQQ trading around 369. So right around here toward the lower end of the Vanna model as well. All right, let's take a look at some setups now. And again, the takeaway from this is that still looking for higher volatility, but less so than the last few days as gamma notional has become less and less negative. And market makers, as far as a move higher, the Vanna fuel that was in the tank starting last Friday that helped fuel this sharp rally higher has pretty much been burned up, at least according to the Vanna models today. All right, let's take a look now at some setups, and I'm going to take a look at what options traders have been doing today. This is the hero signal, hedging impact real-time options. This is available to Spotgamma subscribers. HERO stands for Hedging Impact Real-Time Options. So everything that we've looked at so far has been static information that I use in my planning based on gamma weighted open interest primarily. Open interest is updated once daily, sometime during the night, and Spotgamma applies their proprietary algorithms to this data to derive the information that I just talked about that I use in my planning. So now we're going to take a look at real-time information in Bookmap and Spotgamma Hero. So this chart is showing price for SPX with a white line and the hero signal for a combined signal for SPX, SPY, XSP, and ES futures. So this is showing options trades and market maker hedging activity, again for this combined signal, all these major components of the S&P 500. And note this purple line is trending lower for the day. Notional value is negative. That's a minus 1.96 billion. So traders net are taking negative delta positions. All right, let's zoom in on this chart and we'll take a look at the setup from this morning. So right here, this is the cash open at 9:30 a.m. Eastern Time. And note, traders were taking negative delta positions. That flow shifted more negative right around 9:50. Note this alert, this flow alert that came in. If you weren't watching this was a good signal to get your attention. All right, let's go take a look at the Bookmap. Focus on the morning. So we know from the open that traders were taking negative delta positions. From the open, that we know before the open, these two levels here, upper weekly expected move and the SPX 4376 level acted as resistance. 4376 noted as resistance in the Spotgamma AM Founders Note that was out, I think by 6 a.m. this morning. Then at the open, again, we saw that traders were taking negative delta positions. At the open, S&P 500 was back up at this resistance level. Larger traders were selling this with iceberg orders. Iceberg orders they used to hide their size. So they were selling this move higher. This icon below here is showing iceberg orders. That's the on-chart indicator. It is obscured by the this green dot, which is showing a buy stop order. We can see in the subchart here, this falling light blue line indicates traders are selling with iceberg orders. So we know that options traders are fading this move higher. Then with this third check of these levels, aggressive sellers start to come in. You can see the shift to magenta volume dots. The volume dots are showing market buy minus sell, with a green dot shows more buyers than sellers, and a magenta dot shows more sellers than buyers. So aggressive sellers start to come in with this third test of the level just around 950. That's about the time that alert came in. And then sell stop orders help to fuel the move lower. And also cumulative volume delta, shown by the dark blue line there, starts to shift lower as well. So very clear indication in Bookmap as well as Spotgamma Hero of a short setup. Just darken up the heat map a little bit. All right, so there's the short setup in the S&P 500. Let's zoom back out. And there was a slight move up as options traders took positive delta positions, but that didn't last long. ES reversed lower below VWAP as as traders negative aggressive sellers came in, shown by the magenta volume dots there. So that reversal below VWAP, which is shown with this light blue line here. All right, so there's the setup in the S&P 500. Nice gradual uptrend, a downtrend. And pretty nice deep pullbacks for short entries. All right, let's take a look at NASDAQ. Pretty similar pattern in NASDAQ. We'll see what options traders were doing. So I'm going to take a look at a combined signal for NDX and QQQ. And I'm going to zoom in a bit so we can take a look at the morning. And this was a very nice divergent short. So note there was a sharp move higher at the open and options traders were fading that from the beginning. And then price responded lower just a few minutes later as options traders were taking negative delta positions in NASDAQ, and price reversed at that 250 level. So this chart is shown in terms of NDX price. There's the 15,250 call wall. Options traders were fading this move higher, and then NASDAQ reverses at the 250 level. Let's go take a look at Bookmap. Focus on the morning here. So here's the initial setup, just right after the cash open. Aggressive buyers moved price right up to the call wall level. Price moves below the QQQ 371 level as options traders were taking negative delta positions, and then aggressive sellers come in. So you can see the very clear shift from green volume dots on the way up to magenta volume dots on the way down. That's shown with the cumulative volume delta here. Also, sell stop orders fuel that move lower. So very clear divergent short setup. Here was another opportunity. Again, a pretty clear shift in order flow. It took a while for that to play out. Let's go back to Hero. Zoom out for the entire day. So up until about 11:45, this hedging flow was definitely bearish. Then it shifted again around 11:45 to bullish. Still net negative for the day. This number is negative notional value. And price is not really responding to the options trades anymore, at least maybe starting to now, but so far price has been trending lower, even though the options traders have been taking positive delta positions. Let's go back to Bookmap. Let's see who is in control. So I'm looking at the subchart here. Cumulative volume delta right here, right around here, shifted from positive for the day, shown with the dark blue line, to negative for the day, shown by the the magenta line. Also, sell stop orders still helping to fuel the move lower. And large traders, net, have been buying this move lower, but this number is pretty small. 125 positive for iceberg orders. All right, past 2910, your comments are not appreciated. Please move on. All right, so that's NASDAQ. Let's take a look at some stocks now. I'm going to go back to Hero. Start with Apple. So Apple this morning, short setup, then long setup. Note this flow alert came in. Pretty timely for a reversal lower. All right, let's go take a look at Apple and Bookmap. So just following the options market today, long, short, long, not a lot of movement in Apple. Let's go to AMD. Nice downtrend in AMD here. Let's take a look at Hero. AMD. So again, a very strong correlation between options trades, hedging activity. Let's see what traders are doing. So they've been selling calls. That's shown by the falling orange line, also the negative notional value. They have been buying puts. That activity seems to have slowed down somewhat around 120, but still the blue line showing, falling blue line showing traders are buying puts, notional value negative. Sorry about this. This is not anything that I did. It's a problem with Hero. All right, so options traders definitely in charge today for AMD. Let's go back to Bookmap. And pretty deep pullbacks for short entries as traders take negative delta positions. Again, selling calls, buying puts. Note the shifts in order flow here at these turning points. A lot of magenta volume dots there. Aggressive sellers come in. All right, the next is Google. All right, let's take a look at Hero, see what options traders were doing. So AMD, good short, and Google was a good long in the morning. Note the very timely flow alert here, drawing your attention to a potential long. Traders are taking positive delta positions. Price breaches the 140 call wall key gamma strike. And in this case, right around just after 11, options traders take their foot off the gas and price moves lower. This is a pretty typical pattern of a bullish day when this hedging flow shifts from positive to negative or neutral. Let's say at this point, if you wanted to either take profits or sell a call spread or buy a put spread, just indicating that all price has to do is stay below that level. That's a very good setup. Again, this works mostly, of course, on a bullish day where the bullish trade mostly takes place in the morning up until 11:30 or 12. And then you can play this reversal again. A very easy way is just to sell a call spread or buy a put spread, and all price has to do is stay below that level. All right, so that's Google, long and short. The next is Meta. Meta has definitely been in play this week. Note 330 is the call wall. That was a price target if price continued higher. All right, and another timely flow alert for a potential long, as options traders were taking positive delta positions. And note from this chart, as options traders take their foot off the gas, start taking negative delta positions, price moves lower. Again, a very easy setup here is to buy a put spread or sell a call spread. Let's go take a look at Bookmap. All right, Google reverses right at 141. Trend break, move lower as options traders take their foot off the gas. Let's go to Meta. And I completely forgot about the FOMC minutes. Sorry about that. And that really did not seem to have much of an impact. It looks like now the S&P 500 has broken this downtrend and now starting to make higher lows. But that started before the FOMC minutes at 2 p.m. And note that large traders were starting to buy with iceberg orders before starting about 12:30. That's shown by the rising light blue line. You can also see the iceberg orders here in the subchart. E indicates executed. They continue to buy. So for example, this icon indicates 1,040 contracts were executed. All right, then as price starts to move higher, aggressive buyers coming in. Shown by the green volume dots, rising CVD, and then also now buy stop orders, shown by the rising yellow line, as well as this icon here with a small green dot, fueling the move higher up to VWAP, and now the 435 volatility trigger. All right, well, Kite Attack asks, has Hero reacted to FOMC? Let's take a look. Let's go back to Hero. Take a look at the S&P 500, and yes. But note the move started higher, really just between 130 and 145. Right around here. And note this flow alert that just came in for the S&P 500. And those flow alerts sometime can indicate a turning point. Reversion to the mean. Let's take a look here. So here's the S&P 500 Hero flow. Let's just see what traders have been doing in more detail today. So the orange line is showing calls and the blue line is showing puts. So the call line was really slightly negative until about noon. 12:30 started to rise. Traders started buying calls. Sorry about that. It's nothing I did. Let's go back, try again. All right, then traders have also been buying puts all day. So this is pretty typical for the S&P 500. Traders are buying calls and buying puts, and now they have started selling puts. So Spotgamma indicates that when the lines are moving in the same direction, this can be a pretty powerful indicator. So right around 150, before the minutes were released, traders started buying calls more aggressively. They stopped buying puts and now started selling puts. But again, this started before the release of the minutes. And we saw on Bookmap aggressive buyers coming in, and also large traders were buying with iceberg orders as price moved down, and that started before the release of the minutes as well. Let's go back to total signal. So there's that flow alert again, indicating can indicate a potential reversal. Let's just see what 0 DTE traders are doing. Sorry about that. Scroll back out. 0 DTE shown with the green line, and that is higher notional value, much higher than the purple line. So traders in the options that expired today are a little bit more bullish than the options traders with a total signal, which is pretty much flat for the day. Whoops. Let's just go to the 30-minute look-back period, focus more on the last 30 minutes of the day. So this is before I was looking at the entire day of data, and now this is just looking at the last 30 minutes, like a 30-minute, 30-period moving average. All right, so this options trading, now looking at this a little bit closer time period, finer rolling, smaller rolling window period. Looks like it has leveled off just a little bit. Also, the flow alert again came in. Well, let's go back to the, now let's go take a look at Bookmap. So it looks like now that S&P 500 found resistance at this cluster of levels here, the SPX 0 gamma level, just below that the SPY volatility trigger level, as well as VWAP. And aggressive sellers came in, buy stop orders, and aggressive buyers fueling the move higher, shown by the green volume dots, and then aggressive sellers start to come in as options traders were taking negative delta positions. And you're welcome, Kite Attack. Yeah, I think Hero is pretty unbelievable too. It's a great indicator. It's what I really like to see with Bookmap and Hero is all the different players, smaller traders with stop orders, larger traders with iceberg orders, options traders, and those various instruments that I talk about, and determining who's in control. And options traders often have a very large influence on price. When traders buy and sell calls and puts in SPX, SPY, ES, and XSP, options traders hedge those trades. Options market makers hedge those trades with ES futures. So that's why watching Hero options trading and hedging activity is so important. Let's take a quick look at NASDAQ, and then I'll have to wrap it up for the day. My time is up. Pretty similar reaction to NASDAQ. Move higher up to the QQQ 370 level. Price reversed, and now maybe trying to move higher again. We can just see what options traders are doing. Go back to the S&P 500. So far, Hero continues to trend higher. Let's take a look at NASDAQ. And Hero also continues to trend higher. All right, sorry I got to the FOMC a little bit late. I just got kind of wrapped up in questions and also looking at setups. Anyway, I want to thank everyone for watching. Thank you very much for your questions and comments. And remember, CPI today, data tomorrow at 8:30 a.m. could be a market mover. So we'll talk about that tomorrow. So again, thank you very much. Thanks for watching. Thanks for your questions, comments, and I will see you tomorrow. Bye.